following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the January 4th, wonderful Wednesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I at just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in 877-927-6648. Now is not too soon. Of course, you can send me an email, steve@tfnn.com, and inside the Tiger's Den. Any ping will do. So let's go ahead and get this show started on wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we've got the Dow trading up 45 points, trading out at 19,927. S&P is up 11, trading out at 2268. NDX 100 up 21 points, trading at 49.32. NASDAQ Composite up 40 points. She's trading up 0.7% and out at 54.68. Russell 2000 is a big mover and shaker out here, up nearly 2%, up 26 buckaroonies, trading at 1383. The semis are up about 0.25%, really 2 points. New York Stock Exchange and the Wilshire 5000, both up nearly 0.7%, 76 and 155 points, respectively. Gold is up $4. Silver is up 14 cents. Light sweet crude up nearly $1, 90 cents, up at trading out at 54.19. Leading the charge here to the upside, Priceline up $9. Tesla Motors up $8.70. Chipotle up $8. The IBB up 6, Athena Health up nearly 6, SVB Financial Group, that's up $6 as well. To the downside, Intuitive Surgical down $11, 1.6%. UniFirst Corp Mass, whatever they are, they're down $6, a little over 4% out there. Valero Energy down 3.5% or $2.50. Tesaro is down a couple of bucks. So plenty to look at, but I want to look at what you want to look at. So where do we begin? Maybe we should just go take a look at the Big Daddy Don Garlitz. I think he's from Tampa. I know whenever I used to go up to visit my daughter up in Gainesville, you drive right past Big Daddy's place out there. And the Big Daddy. So let's go check out Big Daddy. I don't know which Big Daddy would that be. Would that be the Dow? Why don't we go check out the Dow, try to figure out what it is or what it is not doing out here. Well, it's trading out at 19,927. Let's start by looking at the Dow Equity Futures. Ocala. Thank you, Mr. David White out there. If we take a look at the Dow, hasn't really done much of the heavy lifting here over the last several trading sessions. Continues to get thwarted out there. Got to like being able to use that word. Right here at about Stevie's yellow line, 19,863. You can see that we've traded up into it a couple different times today, and thus far it has held its resistance pretty much just as it did yesterday. And so that's going to be a key area to watch in the equity futures, because if price closes above 19,863, then I would say the 20,000 level, different price, by the way, than what we're looking at here in the equity futures contract, but then the 20,000, the cash index is probably pretty much written in stone. So the next key level is this yellow line, 19,863. The ES Mini is over that level of resistance, which was 22.58. That hasn't changed. The Russell 2000, just a moonshot, as it went ahead and took out this area late last night about 10 o'clock and never really looked back. The NQ, so it's the Russell that's doing all the real lifting out here. We saw that just simply by the percentage move. The ES Mini could easily run to 22.71 out there. That's an A to B equals CD to the upside. You and I really took a look at it yesterday. We saw the retracement we said was a 0.618 retracement between the move, the low from Friday to the high of yesterday morning out there. That's an ESMA. That 1-to-1 A to B equals CD looks like this. And at this stage here, until we see a failure, a price get below 22.58.75, there's no reason for us to believe that that won't happen out here. Now let's go from these intra-session type charts out here. Let's go take a look at horizontal trading range. Let's pull up the Dow, since we were talking about the Big Daddy out here. And with the Big Daddy, right? He is he still around? Do you know? Is he still alive? I think he is. It's got to be in his late 70s or so, right? Big dragster out there, broke. I think he was one of the first guys to get above. I don't know, 250, 260, 270, 280, something like that, in his drag racing vehicle out there, drag racer. In any event, let's come back and take a look at the Dow. I'm sure somebody will let me know whether or not the Big Daddy is around. If we take a look at the Dow, we look at the horizontal trading ranges. Those are the lines, horizontal lines going across my screen out here. Blue represents daily. Red represents monthly. Green represents the weekly levels out here. And if we look at these to help us identify, is there a top in place? Is there a bottom in place? What this tells us is, as long as the Dow is trading above 19,743, which is the daily horizontal trading range, then price should move up to the next level. Now, the next level happens to be the top of the weekly horizontal trading range number, and that's 20,170. That certainly takes into account the getting to the 20,000 level. So to step backwards, watch the price point inside the YM, Dow futures of 19,863. We start to see closes above that. That should free up the Dow, and perhaps even the NQ 4941 is the area that you want to go ahead and take a look at, but that should free up the markets to continue to move higher, and that really matches what we're looking at as we take a look at the Dow's horizontal trading ranges. In the case of the Russell 2000, let's go take a look at it, since it's the big mover and shaker out here. And as we take a look at its daily and monthly horizontal trading ranges, that 1358 level, which is this weekly chart that we're looking at, where price basically has tested for the last month out here, tested and rejected. This says 1419 is a game out here. You're trading at 1383. At this rate, all it just needs is one more day to do that, maybe 2 more days in order to accomplish that task. If we look at the S&P 500, look for some areas of resistance. Looks similar to the Dow in that, except for the close on Friday, but holiday trading, can you rely upon that number? And the answer is apparently not. We take a look at the weekly chart out here. You can see that 2249 area is a key level of support. This would say 2289 would be game on for the next move inside of the S&P 500. Boy, how about that Wilshire 5000? Or how about the New York Stock Exchange? Extraordinary market breadth, extraordinary volume. If we're going to rely upon the New York Stock Exchange to tell us what's going to happen, buckle up and deal. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader.
As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So we're finding out here that the top fuel dragsters these days reach speeds of 335 miles per hour in 3.7 seconds. I mean, what a ride that is. I don't know. I don't know if Don Garlitz, I think he was like the first one to get up to the top levels of speeds. I don't know what they were. Like I say, 250, 260 is kind of what I remember, something like that. But 335, that's pretty amazing, the type of speed that those guys get up to. Hey, sometimes it's like the speed of these markets out here. Now, so we're looking at the Dow. I mentioned the New York Stock Exchange, so let's go back and take a look at it. We can't really trade it. We can use it if we want to give us a gauge as to what's going on inside the market. I certainly have plenty of tools for us to do that. For example, one of the tools, Market Breadth, is a good way to take a look at what's going on inside the market. And if we look at Market Breadth out here, let's see, what's an easy way for me to do this since I've got a number of different tools on this chart. Let's see if I can turn a couple things on and off and then come back to it. So if I turn that off, that works. Okay, so that was helpful. And then let me come down to the New Year's highs and low, or the 52 weeks. So here on this chart for the New York Stock Exchange, you can see we're all the way back up to its swing point. That's the December 13th level. The low is 11,189. You're at 11,230. When you come inside a swing point, whether it's with volume or not, if you close inside it says you'll go test the top, or should, which is 11,256 out here. The bottom panel that you're looking at is the advanced decline line for the New York Stock Exchange, which is at all-time highs, regardless of whether price is at all-time highs out here. It's at all-time highs. Now, many people take a look at divergences. In other words, price moving all-time highs, but not being confirmed inside the advanced decline line. Basically, and this is a technical term, there's gobs of market breadth out there. Yeah, gobs of market breadth because you're at all-time highs. That's what that one chart shows. Now, I have to manually do this, which is, and I did this as of yesterday, and this is taking a look at the volume. In essence, the volume summation index for the New York Stock Exchange out here. Now, yesterday it hadn't exceeded its all-time high, but I can imagine that, and I won't get these numbers till later tonight. I don't know, 6, 7, 8 o'clock, something like that. And but this is going to, so volume-wise, yesterday was increasing, was accelerating like the big daddy out here. And today's even more acceleration. So for those, that suggest that maybe there's not enough market breadth out here, what are you smoking? Yeah, because there is. Because the data doesn't lie. And I can tell you that this storyteller doesn't lie, just to share with you the way that it is. Now, what problems are there inside the New York Stock Exchange? If we were going to really look for problems or potential problems, we would look at the following. How do I turn that off? Okay, we'll turn this off here. Now we're going to just take a look at the advanced decline oscillator, right? So a little different than looking at the advanced decline line. This is really just taking a look at the difference between the all of the advanced decline data, looking at the difference between the 19 to 39-day exponential moving averages. In this case here, right now, we're up to 135. The reading is 135.14. And you'll see the little dash line on my charts, both at plus 150 and minus 150. Right now, we're concerned at plus 150. When you get to the 150 level, in either side, you're either overbought or oversold. Technical term, overbought or oversold there. You pay attention to it because it can be just like running a race out there and you run out of gas. Now, when you get above 150, for whatever reason, and it is a magic number, when you do get above 150, when you do move above 150, just as we did most recently back here in November, the end of November, as well as in the early part of December, what it is a sign of is plenty of liquidity, plenty of market breadth. So another tool, another way of looking at this. Sometimes you can have failures at the 150 level. That's why you pay attention for that little overbought area. But when you get above it, we're not there yet, but we want to watch this the next couple of days out here. It's a very bullish sign, very positive sign for the New York Stock Exchange. Now, the only thing, and so the mere fact that you're not up there right now doesn't mean a hill of beans, but we're approaching that level, and so you want to be aware of that. If there's any issue out here with regard to the New York Stock Exchange as it's taking on these new highs, if there's any issue, it's really the mere fact that it's doing it without moving to newer high ground with with new 52-week highs. That doesn't mean just the last 2 days. That means over the last 52 weeks out here. And right now we only have 155 issues. The last time that we saw a high out here was back on the trading session of December the 8th, when it made a reading of about 485. Let's go out to Martinez, California, and speak with Brent. Brent, thanks for calling. Thanks for holding. Happy New Year to you and your family.
Thank you for taking the call, Steve, and Happy New Year to you as well.
Thank you. Much appreciated. And you want to take a look at Celldex Therapeutics, Inc. Tell us about this equity, what you're doing, and how we can be of help to you.
This is a new one I'm bringing to you. I've been following this stock, and I did buy in yesterday. I liked it on a lot of different levels, the daily, the weekly, the monthly. The daily in particular, because of the sign of strength back in November, came off that bottom, and then it's testing that, or it had tested it with lower volume, and also that hammer candle yesterday. And if you go on to the weekly, kind of similar. If you go back further, you can see that it was testing with lighter volume. And if you go way back, at the levels that it was like back in 2013 and earlier 2012. So anyways, that's kind of my thinking, and I have my stop fairly tight, and we'll see what happens.
Yeah. Now, what's your target on this? What are you anticipating? Are you anticipating this being able to take out the $5 area?
I'd like to kind of hang on to it. It's an interesting company. I'm doing it more technically, but they're doing a lot of they have different cancer drugs that they're developing, and they are doing it in conjunction with some other bigger pharmaceutical companies, which I like because I've had that before, and sometimes they just get bought by the company if they're successful. still go ahead and take them out. But I'm doing it more on a technical basis. But yeah, I figure it's come way down, and I like the way it's kind of acting here on the daily. And there's a lot of work to be done. But yeah, I'll see what I can get out of it, and it's something I would actually like to hang on to, as long as I can. I mean, kind of longer term, I guess, is my point.
Sure. So, folks, let's take a look at a couple of things that Brent mentioned, which are really just signature items that you want to look at as well when things are coming off of the bottom, when you're doing some bottom fishing out here. And as Brent pointed out, back on November 8th, this thing had wide price spread and accelerated volume. Volume, for example, on this was 7.1 million shares after it came off of the bottom that had 3.2 million shares. So you like to see accelerated volume, wide price spread. And because of Brent's patience out here, this thing came all the way back into that breakout session of November 8th out here. And, if I take a look at retracements from top to bottom, or really from bottom to top, is really what I should say, it got just below the 0.618 retracement level. But what it was doing was getting into a target area, as Brent pointed out. Now, Brent, can you hold on through this break, and then we'll come back to it?
Absolutely, Steve. Thank you.
All right. So we've got, take a look, folks, and you should take a look at it while we're on the break here. CellDex Therapeutics. CLDX is the ticker symbol. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
back up, folks. We're on the line with Brent in Martinez, California. We're looking at that ticker symbol CLDX. The screenshot that you're looking at right now is a weekly chart pattern for this. And as has been commented in the den here, Brent, they're calling you the basing pattern master. And so I want to show you one of the patterns. So that's a nice compliment, and it's true.
That is. Thank you.
Yeah, and one of the patterns, folks, that Brent shared with us was, here you've got an equity. This is now taking us back into 2010, 2011, and 12 timeframe. And what you can see here on the weekly chart is right around January 16, 2012 was when this showed its head that it wanted to move to the upside. Nice little sign of strength out there. And there were several along the way. So fast forward into where are we at today. As Brent pointed out back here in November 7th, the week that began November 7th, was the next time we see that same pattern play out, where you see a weekly sign of strength out here. Now, folks, I had asked Brent about the $5 level because this thing has been basing in between about the 5-ish area, or a little bit lower than that, to the upside as well as to the downside in the $293 area. At $5, there is where we have this little gap down, which could be a natural level. It's actually $6.80. Could be a natural area of supply for people just simply to hopefully get their money back. That's what they might be thinking. When I take a look at the daily chart, one of the nice things that you have that has occurred today, it's not shown here, but on my other chart, the price point of 367 is nice because you're above that level. That means that you're above the oscillator on change line, so the price oscillator has turned up. One of the other nice things about this here, Brent, is that you're back inside the TAS daily profile. The bottom is 361, the point of control is 382, and the top of that box is 454. The way that this should play out for you is this should make a move up to the top of that daily box, 454. The weekly is 459, so that would be the range to be looking at. The nice thing about that for you is that if this is approaching that area with more than 3.6 million shares, then there's a pretty good chance that, okay, wants to make that run for that next higher level, because that's most recent swing point out there from November 15th. But as long as it stays inside of the this TAS profile out here, and the price point of 361 holds as support, then this should be a good trade up into that 450 area, and you just have to kind of gauge it from there. So looks good to me. That's what I see when I take a look at it intraday. I don't see anything else that identifies it as a bottom other than just coming back to a breakout area, but that's what identifies a bottom.
Okay, well, thank you very much, Steve. I always appreciate it. Just wish you the very best in this new year, and
thank you.
We'll be talking, I'm sure, often throughout the course of the year.
Thank you. And everyone in the den wants to know what your next move is. So call often and call soon.
I will do that. You take care, Steve, and as always, I appreciate your help.
All righty. That's Brent in Martinez, California. Ticker symbol there, CLDX. Okay, we were taking a look at the New York Stock Exchange. I think we kind of beat that horse. But what we do know, in summary, with regard to the New York Stock Exchange, for those of you that want to rely upon that, is gobs of market breadth. Both in volume is no problem with volume out there. Volume oscillators making new all-time highs, just as the advanced decline oscillator is. The only issue, as I say, is the number of issues that are at all-time, or not at 52-week highs out there. And it's a little bit light on that. But we know the numbers that we're going to pay attention to inside of the Dow Equity Futures contract to then assist us with regard to where the markets want to go from here. Let's take a look at, I didn't get a chance to look at my emails. I'll do that here real quickly because we've got about 4 minutes left in this segment here. Just see if anybody wrote in. Yes, we do. We've got something here from Rhodes, and Rose would like to take a look at UAA and ENDP. So let's go take a look at those two equities. UAA is Under Armour. So if we go take a look at Under Armour, I don't have an Under Armour shirt on today. I normally do. Yeah, I like their material, easy product. I work out in Under Armour and Nike stuff. But if we take a look at Under Armour, Rose here is looking at these two stocks for possible buys. Now, In the case of, so I would say, Rose, this is like a segue. I don't know how this works. I just know that life happens for us, not to us. And so I think that last call with Brent, where he identified an equity and was patient and he was looking for a sign of strength, that is one thing that we do not have here when we take a look at Under Armour. So pattern-wise, unlike what we just looked at, we don't have that same thing here. In fact, when price moved off of the most recent low out here in Under Armour, it did it with no volume, so to speak. I'm really referring back to the days of like December 7th. That's the only wide price spread day that you had out there, 5.6 million shares. Hey, today you're up with 2.2 million shares. So you don't have that sign of strength that you would like to see that says that, hey, maybe institutions. So this could be Basin as well. Could be moving anywhere from this 32 to 28 level out here. But that's what the daily charts are telling us. If you're going to go ahead and take a position inside of Under Armour, wait for it now to get above the bottom of its weekly profile, 3106. Both that point of control and the bottom are at the same price period, 3106. So that should be a significant wall of resistance out here. But even on a pullback, again, you'd be buying a pullback without seeing that sign of strength out there in Under Armour. If I put this on a weekly basis just to go see where this is traded back to out here, see if there's anything that this is pulled back to a larger breakout area, you could make the case that it is going back into the July 24th, 2014 area. But what else? What other case could we make? You're below a weekly hammer candle from the week of January 18th. That had volume of 38 million shares, and that was broken with 114 million shares. So, Rose, what this actually says to us is that Under Armour is a confirmed A to B equals CD on a weekly basis. To the downside, that ought to take it maybe 2663. 2084, something along those lines out there. So I would say follow Brent's lead. Things happen for us, and he called for a reason to share with us and show us that sign of strength out there. Nothing guarantees a good trade, but you'd sure like to have that. If we take a look at ENDP as the ticker symbol, that is Endo International. Now, here's a stock that does have a sign of strength. So you would almost think that this stock chart looks similar to a CLDX. So this one, to me, just looking at it, boom, as it came up on the chart out here, we could clearly see the long base. This is basing after this thing had fallen out of bed back on May 6th out here. But the difference between this and Under Armour is you saw a nice sign of strength back here on August 9th, 2016, 37 million shares to the upside. And what price basically has done, you don't necessarily like to see what it did on November 3rd, which was at a sign of weakness with volume to the downside. That was 20 million shares after it went up with 37 million shares. Okay, but there's another little small sign of strength out here on December 16th. I'd rather see you trying to attack this one, Rose, than I would like you to see Under Armour. So where is your sign of attack out here? We get back from this break. Let's spend a little bit more time on Endo International. Steve Rhodes with TFNN. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-Share Bull and Bear ETFs. China A-Shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. We're taking a look at Endo International PLC. ENDP is the ticker symbol out here. And Rose, what we know about this equity today, what shareholders are doing, is there's a test of the November 14th swing point, which could be the B point of an A to B equals CD to the upside. Now, it appears that volume on the test of this area, the low of which is 1765, and you're trading, believe it or not, at 1765 or 4 as we speak right now. But that test is coming in on light volume. Nonetheless, if you close above, or if it closes above 1765, this should go test 1863. If it takes that out, then price should run to 2003 or complete the A to B equals CD pattern out here. Let's go see what that price projection is. It's going to be roughly around the same place. So it would be helpful if I actually nailed down the swing points correctly. There we go. Now we get the C point. Yeah, and the 1-1 takes you to 1952. So now, that doesn't help you as far as where to get in on this equity. Ideally, this fails to get over the swing point, continues to base or stay in this trading range, and then you'd be looking at 1507, 1576 as the area. You'll know that you could get those two areas if this were to close back below $17.12. But I like this pattern chart better than Under Armour with regard because of its sign of strength that it had out there. A little bit of sign of weakness, but on a weekly chart, that was nothing more than a test of a breakout area with lighter volume out there. We've got another request here from Tom. A Happy New Year to you as well. Tom is back in the long position for Nugget and Junior Nugget, and Tom made me smile because he, at the very end of the email, said he'd just like to say that these are daily investment vehicles. And as Obi-Wan Kenobi would, in fact, tell us. So if we go take a look at, and what Tom would like to know is our thoughts on where Nugget could go to and where Nugget could go to. So because you're using this as daily investment vehicles, and to answer your question, where could this go to? I think we've got a significant bottom that is in place here for the mining equities. If we take a look at the XAU, we'll pull that up and explain the reason why. I say that at this moment. If I take a look at the XAU, made a really nice bottoming pattern, moving lower, doing less relative energy out there. And it's right now back to this. You'll see this little Stevie green line on my chart out here. That was the mark. That was the line of demarcation to the beginning of one of these TD setup counts out there. So it's a natural area of resistance. So the XAU needs to get above it. You might say, where is that? I'm going to say it's right around where it's trading right now, 82.76, give or take a few pennies. We don't really care about a few pennies out there. But if, in fact, it's able to take out the swing point from a few trading sessions ago, just one more confirmation to me, Tom, that the mining equities want to continue to run to the upside out there. So the XAU looks good. If we did the same thing with regard to the GDX, we would say that it is doing well. It has the same pattern as well out there. And you have a couple of other further questions out here. Now, let's just take a look at today, where the Nugget, N-U-G-T, could trade up to, where it's headed to. I believe, Tom, that Nugget, which you can hold for more than just a day out here, is headed to 1066. It's headed to the top of its TAS daily profile out there. Where is J Nugget or J Nug headed to? That's a junior gold miners. This is another triple out here. If we look for its market profile, should populate here momentarily. Same real pattern. It's targeting the 872 level out there. I haven't really taken a look at what it's doing on an intraday time period, but those would appear to be the places where it's headed. Is it going to go further than that? I believe that the setup and the answer to that is yes. Why would that be a yes? If we go take a look at a number of different miners out here, for you specifically, though, ABX would be one of those because that is the heaviest weighting inside of these. In the case of that, and inside the GDX, we've talked about this in the past out here, we know that what formed was a very nice bottoming pattern. If we take a look at just simply Japanese candlesticks, I'm going to turn the profiles off here just to get rid of some of the clutter. And on the trading session of December 27th, the low out there was 1461. 1 penny, 1 ping, Vasily. What that 1 penny did was it created a nice little island bottom. That can be a very significant bottoming pattern, just as it could be at the top. So you've got that going for you. You've got the nice little sign of strength out here back on December 29th. That doesn't mean that price can't pull back, because most certainly it can. But that's another nice sign that this has going for it. Now, this is Barrick Gold that we're taking a look at. The GDX has the same pattern out here. And there's really a couple of more equities that have island bottoms. We're long those equities in our newsletter out here, just as being long the GDX because of that island bottom formation out here. So everything looks like, and if I put the market profiles up for this, this says that the GDX wants to run to 2361 out here. And so that's the game. Volume today, kind of light, 33 million shares going into 142 million shares, and back on December 29th, 140 million shares out there. But all looks pretty darn good. Now, you mentioned, what are my thoughts on the FOMC meeting minutes out here? Not much. I think that the minutes were more important when, are they going to raise? Are they not going to raise? Kind of a deal. So they've already indicated what it is they're going to do. Who really cares who abstained or who did this or who did that? I think it's become less. I mean, the market can prove me wrong. It does all the time. But I really think it's less of a issue with regard to what the minutes are. But with regard to what the market is doing and what does impact trading, certainly you pointed this out, and your question was, hey, what are my thoughts on the yen, the dollar, and bonds out here? And with regard to the yen, Japanese yen out here, ideally this will strengthen because this trades and leads the direction for bonds and for gold out here. And I don't know if that correlation has not come unglued here just yet. What the yen has done, if we take a look at the yen futures out here yesterday, as it was catching up to trading from Sunday and Monday out here, it gapped lower, was really just testing the bottom of its TAS daily profile. So all looks pretty good. It's a directional indicator. It's not like this has to blast off and take off to the moon or anything like that. But at this stage here, the yen futures look pretty solid, haven't failed out there. And so that looks pretty good. The U.S. dollar index out here, where are we on the U.S. dollar index? If we take a look at it, it's trading back 591 ticks, so to speak. Now I've got a 10-minute delay, so it's going to be a little bit slightly different than that. Tom, the only thing I could really share for you with regard to the U.S. dollar index is that, and this goes true, although I haven't shown this chart, I didn't even share this with subscribers yet. They just didn't chart it. I went and did all the spreadsheet data. And I shared this part I shared with everybody last week, which was large commercial traders are taking the opposite side of the trade in a fairly quick way. In other words, they're getting net short the U.S. dollar index. So that drove me to go in and take a look at the yen. Yen futures traders are getting long. I mean, they think that the yen is going to get stronger in an even larger way than just the U.S. dollar index. So all bodes well. Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back. Dow's up 45. S&P is up 11 points. Let's take a peek around the indices and give you a feel for what they are or are not doing out here. If we take a look at the S&P 500, right now it's really trying to test that oscillator on change line. That is the red line that's going across my screen right now. It's priced at 2274.54. As long as price stays below that, then the topping pattern that formed with the TD sequential count a couple of weeks ago is still in play out here. Closing above that level, that would say, okay, game off. The bulls actually have the ball for the time being. But at this stage, there's really the S&P 500, the topping pattern that formed back here. I don't have the exact day. I'll give you the day. I'll go get the crosshairs out here. It looks like December the 14th. Would be the number. That topping pattern is still in play, and is still very active. If I look at the Dow, which we will do together, in the case of the Dow, getting to $20,000 means not a whole lot of beans. It does for some folks out here, but it does mean a hill of beans for you and I, because price needs to close above 20,042. That's the number today as the oscillator on change line. So its seventh wave move, its price moving higher with less relative energy. Significant topping pattern out here. Not like, hey, so significant that we're not going to see the highs again, but a significant enough topping pattern. That has not gone away. And even if it gets to 20,000, okay, so what? New York Stock Exchange, if we take a look at it, all that, well, I take that back. This chart here doesn't have it updated. Son of a gun. Neither did the Dow's chart. Gosh darn it. What the heck? Maybe I can do it this way. Let me do this. Let me see here. Let me come back to the Dow. Sometimes the charts. So indicate 20,057 inside of the Dow. Now you've got at least today's activity. I don't know what's going on with that other chart. I mentioned the New York Stock Exchange. So let's go take a look at it. Now, the New York Stock Exchange is a little bigger, different animal out here. And that is because it is trading above that oscillator and change line. So not only does it have strong market breadth, not only does it have a volume pattern that confirms these highs, prices now moved above. It's got a rising price oscillator above zero. That doesn't get more bullish than that. Can't trade this indice, but I'm telling you, New York Stock Exchange, it ain't the weak link that is out here. That is for sure. Let's go. I got to keep that chart. I forgot. Let's take a look at the NDX 100. Go see what it is doing out here. In the case of the NDX 100, traded in essence right up into the top of that oscillator on change line. It's slightly above it as we speak right now. So this is going to be more of an end of day. If you trade down around 49.35 at the end of the day, it's just testing resistance out here. The Russell 2000, let's go take a look at it, right? So the Russell 2000, we know that has been very strong today, up about 2%. That is just testing the top of that oscillator on change line. 1387 is the number. We're trading at 1384 right now. So it's topping pattern. It does have one. It doesn't show you on this chart here, but it has a topping pattern that is in place. So what does all this mean? Well, what this all means is the following. Number one, what the market is doing today, there's some people that say as the first few days in January go, so goes the market. Those folks drink Kool-Aid, and if you're out to a party, you should invite them because it has got to be really good Kool-Aid because that is all hogwash. Now, I don't know if the Kool-Aid is hogwash out there, but the conclusion is hogwash because what I can tell you factually is that over the course of the last 85 years, the market in the first few days of January actually moves higher. So the market, and let me just say, when I say the market, I'm referring to the Dow, okay? Just referring to the Dow, because that's really all I've got 85 years worth of data on. And the market is doing exactly what it has done on average for the last 85 years. Anyways, thanks for joining us. Stay tuned. Our favorite polar bear, Mr. David White, he's up next on the Tom O'Brien Show from 3 to 5. We'll see you back on Terrific Thursday. Have a great day. Thanks for being here. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.